guys, welcome to today's session in Quantsapp. Okay, so before starting on the topic, before initiating the topic, let me tell you about something about the application. Okay, so first of all, if you are new to the video, okay, and you haven't installed the software, so first of all, you can go to the description. There is a link below, and you can download and install the application. Okay. So on the application, when you will install the application, you will get 25 free tools here, okay, which you can use in your trading, okay, and maximize your profit, obviously, okay. Now we have something more here. So when you will go in the learn section, okay, so in learn section we have the video library. So basically it is the there are so many videos, okay, of advanced tools. So basically it is a bank of tools. You can see like how the various tools are working, okay. So you can get an idea of various advanced tools here, right? Now in the video library, you can also see in the language section, we have 4 multiple language. So either you want to see the video in English, in Hindi, Marathi, Tamil, okay. So we have multiple choice here. So you can select whatever you like. Now then there are some more options available here. So you can choose all the things according to your requirement, okay. Now if you are having any kind of doubts or query, so here it has been given support, and you will find like the support, you can mail us here, and this is the number is also given, okay. So for any doubt or query, you can directly contact us, okay. So we will be there for you, okay. So guys, now coming back to the topic, okay. So the topic for today is how there are so many traders which are beginner, right? So how they can initiate their trade and how they can do the intraday trading, right? So for that, let's come to the track, okay. And here we have the option chain, okay. Now when we are looking into the option chain, so there are certain things, okay. You can see in the call side also. In the call side also, there is open interest, volume, IV, premium, okay. And same in the put side, okay. Now the main thing here is the open interest, okay. When we are looking into the open interest, okay. So what does the open interest signifies? Okay. Now it basically tells you about the sellers. Now, not particularly about the seller, but we decipher the open interest, in terms of seller. Why? Because sellers are the risk takers. They are taking more risk, okay, and their profit is limited. So we generally, think that if a seller is making any position here, okay, at any certain point, okay, so he must be having some conclusion, okay, his strategy, there must be some strategy. So that is why we are going with the open interest on the basis of seller, right? Now let's come to open interest, okay. So here you can see we have given you open interest in a tabular form also, okay. So here are the multiple strikes, and then you can see the premiums also, and same we have given the put OI here and the put premium also, okay. So if you like the tabular form, so you can see the open interest from this side, and here we have provided you open interest in a graphical representation, right? Now you can see there are some red lines and green lines here, okay, and 25,179. So this is the fair price of Nifty, okay. Now when you will go in the upward direction, so there are certain lines, and as you can see the length of the line is increasing, so that means that is the position of a seller, okay. So as we have seen, the fair price of the Nifty right now is 25,179, right? 25,179. So that is the current fair price of the Nifty, okay. Right now the market is closed, okay. So here we have the fair price. Now if you will move in the upward direction, so you can see there are certain lines, okay, and these lines are, they are in greater in length as comparison to this line, right? Now how can we understand this? So basically these are the open interest, okay. So it means like the option seller, okay, the call seller, they are making their position here, okay. So here you can see this is the line where the option seller is, okay. So if I'll select this, let me close it, okay. Now I have selected the strike price of 25,250, as you can see, right? So in the strike price of 25,250, okay, I can see there is a 55 lakh 87,125 call sellers, okay, and I can also see there is a change of like 26 lakh 76,300, right? At the same strike price, you can see there are certain put sellers also, okay, and there has been a negative change. It means the sellers who are in the put side, okay, the sellers who have sold put, they are exiting their positions, right? So there has been, approximately 9 lakh put seller has exit their position. Okay, so this is how you can get an idea, like this is the resistance here. If you will go in the upward direction in the Nifty, so you will get a resistance at the 25,300, because this is the largest resistance I can see in my pictorial graph, right, in my graphical representation. Similarly, if you will go in the downward side from the 25,179, so I can see a red line here, so that means that is a put seller. Okay, so the put seller are, they are expecting the market to go in the upward direction, okay, because they have sold the put, right? So they are expecting the market that this market, the Nifty will not cross this price from 24,950, okay. So what will happen? So if I'll give you a brief idea, right, if the call sellers don't want market to cross this level, okay, and similarly the put sellers also don't want Nifty to cross this level, so what the market will do? This level, okay, so what the market will do? It will oscillate between these two levels, right? This is how the Nifty will react with these two levels, right? Okay. Now, when I'm looking into the Nifty now and I want a overall representation, so in Quantsapp we have given you a intraday feature, okay, so that intraday feature, you can access that feature from the track, and then you have to come in triggers, right? Now to give you a overall overall view of this trigger, how you can use this. So as you can see here, there is a change in OI, right? There is a change in OI. So basically what change in OI shows, it will show you how much seller has been added or how much seller has been decreased from their positions, right? So this is change in OI. Now basically OI, this is showing us the position, how much contracts of seller has been added, okay. So right now how much contracts has been there in this position, so that is basically what OI shows you. When you are talking about the call difference, so basically it will show you like how much your current market is. Like if you are talking about the about India, so right now it is at the level of 30,014.85, right? And your strike price is 30,000, right? So 0.05% will show you how much your market is above or below from your current strike price, right? So this is what. If you will go in the put side, okay, if you will go in the put side, so I can see change in OI here. So this change in OI is showing me how much contracts are there in this strike price, okay, and there is change in OI. It means how much contracts of seller has been increased or decreased from this particular strike price, right? Similarly, put difference. So put difference shows you like how much above or below this strike price is from the current market price, right? Now these were the certain terms that you can see in the here in triggers, okay. Now how you have to look, how you can see like which stock you have to choose, or if you are going to trade in intraday with the help of triggers, so there will be some signals on Nifty, Bank Nifty also, there will be some signals in stocks also, right? So how you can use this trigger? Let me give you a brief idea. So first of all, what you have to do, as you can see here, there is a change in OI, okay. So in change in OI, there is an arrow, okay. So what you have to do, when you will select this arrow now, so it will position the change in OI in ascending or descending order, right? So right now, as you can see, I have changed this order. So here you can see JK Cement. So in JK Cement, I can see there was a OI of 72,125, right? And from this 72,125, 44.63. It means approximately 45% of OI has been decreased. Okay, so it decreased, it means what happens? So as I'm seeing the call side, so if this is a call, right, call side, now there is a call OI, it means the call sellers, okay, so who have sold call, so it means their prediction is that the market will go in the negative direction, right? So now if there is a negative change of 44% or approximately 45%, so what it means that now JK Cement will not go in the negative direction, but if there is a change in OI, okay, and with this huge number, so the JK Cement can actually go in the bullish direction, okay, so that is what it shows, right? Similarly, if we'll go in the Shri Cement, so same thing, you can see 24.04%, right? If you go with this one, so all these stocks here, you can see there is a negative change in the OI. It means the OI in the call side is changing and actually it is decreasing. Okay, so it means the sellers in the call side, they are changing their position. Okay, they are exiting from their position. So it means we have a general idea like the now these stock who are in the JK Cement, Shriram, and any of these stocks, so they can go in a bullish direction, right? Now I have looked into the data of highest calls. Now when I'm looking into the put side, so I can see here the change in OI in the call side was minus 44.63%, right? And also there is a change in put side of minus 1.75%, right? So in the call side, the sellers are exiting their position. Okay, so it means the market can go here. In the put side also, the put seller, they are also exiting their position from 1.75%. Okay, so it means it can go either in this direction. Okay, so when it is giving you a contradictory numbers, so at that time you can just ignore those kinds of stocks, right? So what you can do, you can go with this type of stock, okay, stocks in which you are getting a positive open interest, right, in one side and a negative open interest in the other side. Okay, so these type of stocks can be the chosen one. Okay, you can choose this type of stocks, right? So now what I have done, I have basically from out of all these stocks, I have selected a few ones. Okay, for example, it is showing me a negative number here, okay, positive number here, so I have selected this one. Okay, similarly, if you will go with this stock, so it is giving me a negative change in OI this side, okay, and a positive change in OI, so I have selected this one. So similarly, you can select 2 or 3 stocks, right? 2 or 3 stocks you can select. Now the another step after this, what you can do, you have to check the call difference, right? Now the call difference, you can see there are some numbers which have been given in the green colors and there are certain numbers which are given in the white color. So basically what happens, whenever there will be a return of more than 2%, so that number will be shown in the white color. Okay, and you can just if you'll take my suggestion, so you can just ignore this type of stocks, right? So now what we have got, 0.0%, 0.06%, 1.42%, okay, and this one, right? Now if a stock is only it has broken out and it has given you 0.4% right now, okay, so still there is probability that this stock can go more in the upward direction, right? But if already a stock has given you interest of 9.38%, okay, so the chances are very less that it can go more in the same direction. Maybe there will be some reversal. Okay, so we will not take risk and we will only trade with the stocks which are in green in call difference, right? So that is your second point. Okay, now let me clear this. Okay, now you can see in the green number also, okay, there are certain numbers which are in negative sign and there are certain numbers which are in positive sign, right? So for example, I'll give you example. For example, this is a resistance. Now if a number is in negative sign, so what you can understand, for example, it has already broken your strike price or resistance, okay, and it is going in the upward direction, right? If a number is in positive, if the number is in positive, so what you can see, you can just see that the stock has not broken its resistance, but it is somewhere to the strike price or the resistance. Okay, so maybe in the near future it will break its resistance, right? So this is how the number is given in positive or in negative, right? So this is how you can, if you are doing the intraday, so you can make a mind that the stock has been already broken out. Okay, so you can trade, take a trade in a pullback, or when the market take a retest. Okay, so if a stock has already broken out, so you can wait for the market to retest, and whenever it will take the retest, then you can take your trade in the upward direction, right? If a market is near to the resistance and it has not broken yet, okay, so you can wait for the breakout, and when there will be a successful breakout, then you can take your trade in the positive direction, bullish direction, or you can buy your call, or you can sell your put, right? So this is how you can take a general idea if you are a new trader here, okay, and you just want to see the intraday stocks. So this stock is basically a scanner, so it will give you proper stocks which are wherever there will be a maximum change in Y in the call side and the put side, so it will give you all those stocks. Okay, now you can see here there is a option. Okay, so here you can see there is an option to refresh. Okay, so if you are trading in the intraday, so you have to click on that button. So what it will do, it will just refresh your all the data. Okay, and if a stock in the real time is changing its OI, okay, at a very drastic pace, so it will give you that stock also in the upper region. Okay, so basically this is how the feature, the trigger feature, okay, it refreshes itself, right? Now there is one more option. For example, you have selected one stock. For example, right now I'm selecting JK Cement. Okay, so if I have selected JK Cement, so what you can do, you just have to go on analyze. You can go in the chart, okay, and you can just type your stock here, right? So let me change the stock. Okay, so you can type any stocks. Okay, for example, I'm going with the JK Cement, right? So I have applied the chart of JK Cement here. Okay, right now the time frame I'm using is 5 minutes. Okay, so for example, if you are making a positive sentiment here in JK Cement, and you think now there is a certain resistance. For example, let me make a resistance for you. Okay, so if you think there is a certain resistance and JK Cement now, the JK Cement is about to break that resistance. So what you can do, you can just wait for a candle to make a breakout. Okay, and whenever there will be a breakout, then you can see the order book data here. So here we have another feature of Quantsapp application, that is the order book data, right? So in order book data, you will get the buyer initiated quantity and seller initiated quantity here, right? The buyer initiated quantity and the seller initiated quantity. So the buyer initiated quantity will be in green color and the seller initiated quantity will be in red color. So if a candle is successfully breaking out, okay, your resistance that you have drawn in the chart, okay, so you just have to look like if this candle's BIQ, buyer initiated quantity, is greater than seller initiated quantity or not, right? Now, if the buyer initiated quantity is greater than seller initiated quantity, and not just greater, but approximately 2 times or greater than 2 times, okay, so at that candle, you just have to mark the high of that candle, and then you can initiate your trade in the bullish direction. Okay, so that is how you can make a trade. If you are making a if you are making a sentiment, then you have to buy a call, or you have to sell a put. Okay, similarly in the bearish direction also. So for example, there is a support, and if you think like JK Cement will break this support, okay, so you have to wait for the candle that is breaking it down, and then you just have to see the BIQ and SIQ. So in this scenario, if the SIQ is greater than BIQ, okay, and not only greater but 2 or greater than 2 times, okay, so at that candle just mark this candle's low, and whenever the market will break its low, so you at that time you can initiate your entry, right? So this was a basic concept of triggers and how you can make your entry in a particular intraday stock. Okay, so as I've shown you, the trigger application will automatically show you all the features, all the stocks, okay, that are giving you signal in the intraday market in real time. right? So this is very easy. If you will go into the application, okay, you just have to utilize this strategy. Just go with the strategy 2 or 3 times, okay? And still if you are having some kinds of doubt, so there is a feature that is how to use this particular feature. Okay, so you can just go to the application, and there is some information also given. Okay, so you can go through this if you are having any kinds of doubt, any kinds of query. Okay, or directly you can contact us from the support also, okay, that I have shown you earlier. Okay guys, so that is it guys for today. Okay, so the traders who are beginner and want to do intraday, this, I hope this video will be very useful for you. Okay, thank you so much, have a good day.